What if I told you there's a beginner-friendly way to invest in crypto without buying a single coin, memorizing seed phrases, or worrying about getting hacked? It's called a crypto ETF. And if you're sleeping on it, you could be missing the easiest money in the market. An ETF, or exchange traded fund, is basically a basket of investments you could buy and sell like a single stock. So think of an ETF like a basket of assets you could buy in one go. It's like going to Costco. You don't buy one noodle, you buy a whole family-sized crate of noodles, toilet paper, and 47 granola bars you didn't even ask for. Same with ETFs. One click and boom, you own a whole buffet of stuff. For example, an S&P 500 ETF holds pieces of the 500 biggest US companies. A gold ETF might hold real gold. When you buy a share, you're buying a slice of that whole basket. And since ETFs trade on stock exchanges, the price changes throughout the day like a regular stock. ETFs are popular because they make investing simple. Instead of picking dozens of individual stocks, one ETF gives you instant diversification. And because they trade in regulated markets, ETFs come with built-in transparency and investor protections. It's one of the easiest ways for beginners to start investing. Now that you know what an ETF actually is, don't go anywhere, because later in this video, I'll break down the key differences between buying a crypto ETF and buying actual crypto. It could save you a ton of confusion, frustration, and maybe even money, especially if you're just starting out. Now, what about crypto ETFs? A crypto ETF is an exchange-traded fund that focuses on cryptocurrency. The most common example is a Bitcoin ETF, which is a fund designed to track the price of Bitcoin. In a spot Bitcoin ETF, the fund actually holds real Bitcoin in reserve, backing each share with actual cryptocurrency. It's very similar to how a gold ETF holds gold bullion on behalf of the investors. So when you buy a share of a Bitcoin ETF, it's like you indirectly own a little bit of Bitcoin. The fund has done the buying and storing for you. Crypto ETFs work within the traditional stock market framework. They trade on stock exchanges like the New York Stock Exchange or NASDAQ, and you buy them through your regular brokerage account, just as you would buy any stock or non-crypto ETF. What this means is you don't need to sign up for a crypto exchange or set up a crypto wallet. I honestly wish crypto ETFs existed when I first started getting into crypto. I remember knowing I needed a wallet, but having no clue what that actually meant. So I asked my best friend to explain it all to me, and we were sitting in a Starbucks while he was trying to break it all down for me. He was going on about blockchain, seed phrases, cold storage, and a bunch of other stuff. And I just sat there, completely lost. I kept asking questions and he kept getting more and more frustrated because I just wasn't getting it. That moment stuck with me. It made crypto feel overwhelming. If ETFs had existed back then, I would have joined in way sooner, because it removes all the technical stuff and just lets you invest like you would with stocks. But anyways, the ETF's price will move in line with the price of the underlying cryptocurrency. So for example, if Bitcoin's market price goes up, a Bitcoin's ETF share price should go up roughly about the same percentage also. And if Bitcoin falls in price, the ETF will also fall in value. Essentially, the ETF is a proxy for holding the crypto itself. It's packaged in a format that's familiar to stock investors. It's worth noting that before 2024, US investors didn't have any access to a true spot crypto ETF. Earlier funds were either trust or strategy ETFs that held Bitcoin futures contracts or stocks of crypto-related companies instead of the actual Bitcoin. Those indirect methods had some drawbacks, like potential tracking errors and extra costs. However, in January 2024, the US Securities and Exchange Commission approved the first ever spot Bitcoin ETFs, which was a major milestone. This opened the door for several Bitcoin ETFs to launch, each holding Bitcoin directly. By mid-2024, even an Ethereum ETF tracked Ether, the cryptocurrency for Ethereum, hit the market once regulators gave the green light. Big players like BlackRock and Fidelity jumped right in, launching crypto ETFs and bringing a lot of legitimacy to this space. All of this is great news for everyday investors. It means if you're in the US, you can now buy a crypto ETF and get exposure to coins like Bitcoin and Ether without ever touching a crypto exchange. Crypto ETFs have quickly gained popularity because they offer some attractive benefits, especially for beginners. First, they make crypto investing simple and familiar. You can purchase a crypto ETF through the same brokerage or trading app you use for stocks. In fact, many traditional brokerage accounts and retirement accounts don't even allow direct crypto purchases. For those investors, an ETF is an easy workaround to gain Bitcoin or Ethereum exposure without breaking any account rules. It lowers the barrier to entry. It's like crypto investing for your dad. There's no seed phrases, no hot wallets, no MetaMask Chrome extension that randomly logs you out and gaslights you into thinking you imagine your portfolio. Just good old-fashioned click to buy, the way the boomers intended. Second, crypto ETFs come with the comfort of regulation and investor protections. Buying a Bitcoin ETF means you're operating in a regulated market, the stock market, with oversight, disclosure requirements, and safeguards against fraud or manipulation. The fund must follow SEC rules, use qualified custodians for the crypto, and provide transparency about its holdings. That means the crypto inside the ETF isn't just sitting on someone's laptop. It's being held by professional custodians, like digital vault companies, who specialize in storing crypto safely using secure offline methods. For someone worried about the wild west of unregulated crypto exchanges, this is a big plus. As an investor, you don't have to worry about, is this crypto exchange safe, or what if I lose my private keys? The ETF structure handles those technical details for you. In short, it feels safer and more convenient. As one analysis noted, a Bitcoin ETF lets investors bypass the complexities of buying and storing crypto directly, while fitting neatly into mainstream portfolios. Another reason investors like crypto ETFs is easy access and liquidity. Since these ETFs trade on major exchanges, you can buy or sell your crypto exposure with a few clicks during normal market hours. There's no need to set up new accounts or learn how to use a crypto wallet. This ease of access has made Bitcoin ETFs incredibly popular. In fact, within a few months of launch, billions of dollars flowed into these funds, and trading volumes surged into the Bitcoins daily. Some even say this was the moment crypto truly went mainstream, as large institutions and everyday investors alike started using ETFs to invest in digital assets. One more reason I personally buy crypto ETFs: taxes. You see, I live in Canada and we have something called a TFSA, a tax-free savings account. Any gains inside that account are completely tax-free. But here's the catch. I can't buy actual Bitcoin or Ethereum directly inside the TFSA. What I can buy are crypto ETFs. So for me, it's a no-brainer. I get exposure to crypto, but all the profits are tax-free. And it's one of the main reasons I max out my TFSA contributions with crypto ETFs. Finally, crypto ETFs can help with portfolio diversification. If you already invest in stocks or bonds, adding a small crypto ETF position can diversify your portfolio into a new account class, digital assets, without much hassle. You don't need to become a crypto expert overnight. You can let the fund do the work while you gain exposure to the potential upside of crypto. And because it's an ETF, you can easily adjust your exposure. Buy more if you want to increase it, sell if you want to cut it. And you can do it at any time the market is open. Quick question for you. Have you ever bought a crypto ETF? I'm curious what you're holding. Drop a comment below and let me know which crypto ETF you picked. Was it Bitcoin, Ethereum, or something else? I read every comment. Now, let's address a key question. Is it better to invest in a crypto ETF or to buy cryptocurrency directly? The answer depends on your preference and what you consider important. Let's break down the pros and cons of each approach for a beginner. For starters is the convenience and ease of use. Crypto ETFs clearly win on convenience for most newcomers. Buying an ETF is straightforward. If you bought stocks, you already know how to buy an ETF. There's no need to create a single crypto account or manage digital wallets and keys. When you buy crypto directly, say by purchasing Bitcoin on a crypto exchange, you face a learning curve. Setting up an exchange account, possibly a crypto wallet, understanding how to secure your coins, etc. It's like planning a one-night stand and realizing you need a spreadsheet, 6 passwords, and 2 backup phrases just to make this all happen. Mistakes can be costly. For example, sending coins to the wrong address or losing your recovery phase means your money could be gone forever. With an ETF, those technical steps are handled behind the scenes by professional custodians. This makes crypto ETFs much more beginner friendly. Let's look at security and regulation. With a crypto ETF, you benefit from the security practices and regulation of the traditional financial system. The fund's Bitcoin or Ether holdings are typically kept with regulated custodians, and the ETF itself is overseen by authorities. In the US, it's the SEC. If something goes wrong, say a hack or fraud at the fund level, there are legal protections and the fund sponsors are accountable under the law. On the other hand, when you buy crypto directly, you are responsible for keeping it safe. If you hold your own crypto, you have to guard your private keys and you don't have the same safety net. If you keep it on an exchange, you're trusting that company's security. And history has shown exchanges can sometimes fail or get hacked. So for risk-averse investors, an ETF offers peace of mind. It's crypto investing with a safety net. All right, time for some quick, shameless self-promotion. If you're enjoying this and want to actually understand crypto without the hype, hit that subscribe button. That way, you won't miss the next video when it drops. Now let's look at the fees and costs. No investment is free, and both approaches have costs. Crypto ETFs charge what's called an expense ratio, which is a small annual fee, a percentage of your investment, that the fund takes to cover management and custody. These fees are usually on the order of 0.2% to 1% per year for crypto ETFs. The good news is that competition has driven many new Bitcoin ETF fees quite low. Some are around 0.2 to 0.25% annually. When you buy crypto directly, you don't pay an ongoing fund fee, but you often pay one-time trading fees to exchanges. And possibly there are big spreads between the buy and sell prices. For long-term investors, directly holding crypto might save that annual fee. However, you have to weigh it against the convenience and other benefits the ETF provides. It's also worth noting that ETFs might not perfectly match the performance of the underlying crypto due to fees and small management frictions. They're designed to track the price, but they aren't guaranteed to replicate it exactly. In contrast, if you hold actual Bitcoin, your investment will rise and fall exactly with Bitcoin's market price, minus any trading costs you pay to acquire it. Now let's look at the control and utility. Buying crypto directly gives you more control over the asset. You can move your Bitcoin to different wallets, use it to buy things, lend it out, stake it for interest, or participate in the crypto ecosystem. With an ETF, you can't, for example, take a share of a Bitcoin ETF and go purchase an NFT or use it in DeFi. I mean, you could try contacting Fidelity and ask them to mint you a JPEG, but good luck with that. The ETF is strictly an investment vehicle, not a usable currency. For many beginners, this isn't even a concern. They're only interested in price exposure and profit, not using crypto for transactions. But it's something that you should keep in mind. Not your keys, not your coins, as crypto enthusiasts say. With an ETF, you never personally hold the crypto. The fund does it for you. This is a trade-off. You sacrifice some decentralization and direct ownership in exchange for ease and safety. Let's talk about the trading hours and liquidity next. Crypto trades 24/7. You could buy Bitcoin on Sunday at 2 a.m. if you want. ETFs, on the other hand, only trade during regular stock market hours, which is Monday to Friday from 9:30 a.m. to 4 p.m. Eastern Time. So, if crypto prices move overnight or on a weekend, ETF prices won't reflect that until the market opens. For long-term investors, that delay isn't a big deal. During trading hours, crypto ETFs are highly liquid, especially for big ones like Bitcoin ETFs. Direct crypto markets are also liquid for major coins like Bitcoin and ETH. Just keep in mind, ETFs don't trade around the clock. So now you know how crypto ETFs work and how they compare to buying actual crypto directly. I mentioned earlier that I originally bought ETFs in my tax-free savings account. But here's the twist. Earlier this year, I sold all of them. Why? Because I found one specific crypto stock that felt like Bitcoin on steroids. It's bold, it's risky, but it might also be brilliant. Click here to watch my next video where I break down everything about it. You don't want to miss this one.